Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Mike Ralston, CEO of Blencowe Resources. Welcome back, Mike. How's things?
Yeah, good. It's nice to be back, and thanks for having me.
Great. So obviously today we saw the exciting news of an approach from a potential strategic party in China. Do you want to tell us more, Mike?
Yeah, we've been engaging with various different parties in terms of offtake and gauging interest, I guess, in our end product ever since we completed the PFS in July. I think we've made that clear to the market and sending out technical data sheets, various discussions, lots of discussions with different parties. So there's a lot going on. In this particular case, there's interest coming from Asia, and that interest is essentially saying we want product, we like what you've got, but ultimately in order to make any sort of impact, any sort of meaningful contracts out of this, we need to go through a bulk sample test first, and that requires us digging it out, shipping it there, and then going through a trial facility. The good part, I guess, is that we're not building that facility. It's something that's already there. So it does save us the costs of building something ourselves, but it has to be bulk sample tested, and ultimately we'll see where we go from there.
Okay. Mike, you should sound more excited, I think, at this point, because we've basically just taken a huge leap in terms of our ability to monetize Blencowe Resources. Surely this is really significant.
Yeah, you're right, Kevin. You're right. I should be more excited. I guess I just sort of see this as the practicalities of getting a job done. But you're correct. We've always said that the last piece of the puzzle is how do we sell this product? We know that we've got plenty of it. We know that it upgrades to a very good concentrate. So we really need to find the parties to buy it. And with graphite, as we've mentioned several times on previous calls, there's no ubiquitous market that you just send it into a London metals market or something similar. You actually have to go out and find end users and negotiate and work with them on a relationship basis. So yeah, having somebody approach us and want to do this with us is a huge step forward. It doesn't mean we've obviously got any contracts at this stage. That's for the future. But at this stage where I'm standing, it's a big step forward. And obviously we're very excited about that.
But as you were talking to us before, this has all come about because another third party wasn't able to provide the amount of graphite that this Chinese organization required. So he needed help in terms of being able to provide to this corporation. So, the potential for this happening is pretty high by the sounds of things.
Yeah, it's a market. And, we've seen all the analysts' forecasts about where graphite's going. I attended a Benchmark Minerals Intelligence conference here in Perth last week, and everyone was saying the same thing we've heard time and time again. There's going to be a massive shortage. That shortage is going to be kicking in over the next couple of years. So to hear it coming from parties that actually buy the product and they're saying they're short and they require product is obviously manifesting some of what we've heard from the forecasts and the analysts before. But yeah, it's definitely something that we wanted to explore and we're obviously going to be following this path and seeing where it goes. But if it comes to fruition, there's not just an offtake contract out of this and potentially an offtake contract for all of our stage one product, but potentially more and potentially funding and EPC contracts as well. So it sort of presents as a much larger package and obviously is quite exciting in that regard as well.
Yeah, and I note that you had the different financial notes presented as well, and that was updated recently as well, saying that obviously we had the MPV of $484 million, I think it was, for the 2% of Oran Cross, and then the potential share price now, I think they said should be 50p, was it, from 27p? So we're languishing at 3.5p. Your last raise was at 5p to a institutional investor. And we've had an awful market, and this is the reality of the thing. So, have you any comments on that? And I mean, obviously this takes the pressure off the company having to dilute itself significantly just to move forward?
Yeah, I think what you say is right. It's been a pretty average summer for the UK market,
Average?
in many different ways. Okay,
It's a polite way of saying.
But I guess we can't change that. There's a lot of macro forces, whether it's a war going on in Ukraine, where there's interest rate rise and all sorts of government policy going on there. There's a lot of stuff happening. We can't do much about any of that. What we've got to do is keep pushing our project forward in terms of value adding. And then the kind of numbers that you've just been pointing out, where the value of this thing is incredibly high. We've obviously put out an NPV of nearly $500 million, and really it's about de-risking it more and more and more, so that number becomes a reality rather than just something as a future that we may get to at a point. So yeah, our job is to just keep going and really hope that once we keep kicking these goals, hitting the milestones, the market starts to realize that we're incredibly undervalued against not only our peers in the graphite space, but also the wider market. And I think the other thing to add is that we've all seen what's happened in the lithium space. The lithium companies are enjoying incredible prices. I guess those that are in production are doing well. But even those who are not in production are benefiting from the fact that anything with lithium associated with it is getting a huge rise, and good for them, because there are going to be shortages of lithium, and everybody's associated with that is likely to do well. But there's no question that there's going to be shortages of graphite as well. And I can tell you, you can't make a lithium-ion battery on lithium alone. You've got to have graphite as well as the nickel and manganese and cobalt and other things as well. So we think that we're going to have our day in the sun. And I'm, watching what's happening in the lithium space, and I believe that once we get that moment where the market suddenly cottons on that graphite is going to be incredibly short going forward, and the prices start to rise, we want to be in the best possible position in terms of our own development to get the maximum leverage from that.
Yeah, no, I mean, I think the market is preoccupied with all the current things as opposed to looking forward and saying what is going to be short, because I think we're hearing the same story for copper, we're hearing the same story for nickel, we're hearing the same story for cobalt, we're hearing the same story for lithium. It's a case of, where's the other thing that's required? Well, half of a lithium-ion battery in weight, I think, is graphite. So it's going to be required. And it's a case of when does the penny drop that actually this stuff is all required. And I think the thing that most people don't get with Oran Cross is that your MPV is only 2% of the potential resource, that is in the ground. And this is also the ability to dig this up is not a big deal, is it? You're not like blasting and making huge holes and everything else. It's a case of get the tractors in there and dig it up, I think, pretty much. I mean,
it's a pretty low cost operation for sure. And obviously that means that we can make good margin based on where we are today. But probably worth noting is that the price of the small fines, the end of the market that fills the graphite space within the batteries, has gone up by about 25% over the last 6 months. So when you consider lithium going up by 500% over the last 12 to 18 months, 25% seems like a small number, but it's not. I mean, a 25% rise in anything is quite substantial, and I think it's just the beginning. So maybe we're starting to see that already. The other thing I'll just add, which perhaps is not as easily noted by the market, is that out of all of those battery metals that you mentioned, you can put everything else. Nickel's a great example. Copper's a great example. They all go into smelters and they all come out at the other end, and one copper wire looks the same as the next copper wire. But graphite is extremely different from project to project. Every single one of us has our own characteristics and chemistry, which basically means that at the end of the day, not all of these projects are going to produce battery grade graphite. In fact, many of them won't. And so each and every one of us has to go through this qualification process, trialing, testing, and over a period of time, prove that your quality of your product can meet the requirements for those batteries. And at the end of the day, it's just yet another hurdle for the companies to jump through, which means that they're going to be less graphite companies delivering into this requirement, into this demand, than there will be nickel or lithium or manganese or copper. So the shortfalls are going to be worse in graphite than they are. And the irony of the situation is that the market probably thinks there's so much graphite out there that there won't be any shortfalls. It's actually completely the opposite. And so we're going to see, I think at the Benchmark Minerals Intelligence Conference last week, they talked about the need for 100 new mines in graphite by the end of 2030. And so far they can see less than 10. So there's a big looming shortfall occurring. And I guess our role within Blencowe at Orem Cross is to get our project through the next phase, which is definitive study. Part of that is going to be the bulk testing that we've talked about in this announcement today. We're also going to be doing a lot more testing and taking it up to 99.999 product, because that at the end of the day is what's going to go into the battery. And we know that we've got very few impurities. And what that means is that as it goes forward to the next stage, impurities have to be taken out, and that's costly. So the less impurities you have, the better your product in terms of taking it to that next stage. So yeah, we're pretty excited. I guess there's a lot to do, but we are sensing that the market is starting to change. There's a lot going on in the market side in terms of the graphite market rather than the entire broader market.
Yeah.
And we just want to be right up there at the front of it, making sure that when it all comes to fruition, we've got a project that people can see as one of the winning tickets.
So let's just took 1 second talking about China, because the one thing that I've heard from a few shareholders is, obviously, you remember that China's Ganfeng Lithium, they made a takeover bid, a successful takeover bid, I believe, of Bacanora Lithium a few months ago. I mean, just how much does it concern you that you could become a potential takeover target at a much lower value than the real, even 2% of the NPV?
Look, takeover target is a word that's sort of thrown around. At the end of the day, we've got a shareholder base that's certainly not going to accept any offers at a price or a value that's way lower than what we're worth. And we've got probably 30 to 40% of the shares of this company tied up in the hands of friends and parties that we know well in terms of defending us. So I don't think that the chance of that happening are high. I think the chances are much better that companies want to work with us rather than come in and drive in a sort of hostile takeover type of situation. So we want to work with parties. We understand that the Chinese market is by far the greatest in terms of size and maturity in the graphite space. So if they're good end users there, if they're good strategic partners for us to work with, we're happy to work with them. And we're obviously going to utilize our network, our contacts, etc., to make sure that we have a look at it. Because if you're only going to minimize yourself to a very small percentage of the end users and the end market, you're obviously cutting your chances down considerably.
From a point of view of someone wanting to take you over, there's going to be some serious price action in the market if anything like that does occur. So I think, you're probably going to revert to the true value, if you like, probably pretty quickly if something like this happens. So certainly from an investor point of view, it's possibly even a good thing, but it's not necessarily a good thing from the from the company's perspective. But yeah, I think we're going to see this more and more with many of the companies we are involved with, because their actual intrinsic assets are worth significantly more than their market capitalization. But the market hasn't realized this and hasn't accepted this, I suppose, partly because we're on the junior UK market, and partly because the world has been in a bit of a mess for the last couple of years. So since you came on the market, it's not normal. The market hasn't been acting as it should, if you like, and that is testament to so many companies. It's not just yourselves. So let's hope that starts to normalize. I personally think it will over the next 6 to 9 months, and that's going to come at exactly the time where you probably get confirmation of some of these things happening. So let's hope that people start to realize. I mean, that the company didn't invest at 5p because it thought it was a bad deal previously. That was RAB Capital, was it, I think?
Yeah, we are, we've got a lot of intrinsic value that's way above our market cap, and we know that. I think everybody knows that. It's just a question of de-risking. It's a question of getting out there proving that you've got that value as a real value rather than just a number on a piece of paper. And the DFS that we're going into now is all about doing that, because it's obviously the next level of sophistication in terms of the actual operational and mining study. But at the same time, it starts to bring together offtake contracts, EPC parties, funding, and all the key elements that make this real. And it's our hope that by the end of next year, when that DFS is finished, all of these critical pieces are in play. And we'll have all the funding and the offtake contracts, etc., to kickstart with the stage 1 plant, which can produce 50,000 tons of concentrate. At that level, we're very profitable. So if we can contract for that full amount by the time we complete the DFS, that's a huge step forward. And obviously what we've announced today is the first big step in that direction.
Okay, all good. We hope to keep up with you over the coming months as this develops, and I'm sure there'll be more news as well, and maybe not just Chinese opportunities as well. There are other countries there that are desperate for the stuff as well. I think we mentioned off camera South Korea, Japan, but effectively it seems very Asian driven, as you said before. So, yep, the best of luck, and we look forward to speaking to you soon.
Mike, Ralston, thank you for joining us on the podcast.
Thanks, Phil. Yeah.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.